Good morning. It's Monday, September 8th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. What an exciting weekend with NFL football, man. That comeback by the Bills yesterday was pretty incredible. So checking in on the setup in the U.S. equity markets on precious metals. We got gold. We got hedge fund managers. They're raising their net bullish bets here to a 6-week high for the end of September 2nd. That's according to CFTC data. China's central bank, they also increased their gold holdings in August for the 10th straight month, and total gold held in ETFs rose by about 13% this year to 93.8 million ounces. So you got gold up about 37% here year to date, gaining about 1.2% on Friday. And looking at the overnight price action, continuing to edge higher with 36.6250 being the top end of the range here in the overnight session, sitting just above that 36.50 level. So pretty incredible move here with green across the screen in all of the metals markets. Your next key level of resistance on crude oil is up at 37.15, followed by 38.65. These are some of the Fibonacci extensions that you want to add to your charts here when you start to look at contracts near all-time highs. You've got to do some measured moves here to try and come up with some logical resistance points, some logical targets here to keep in mind. Your first level support down at 35.50 and then 35.35 below it. So you look at equity futures because they are in the green as well here, with equity futures edging higher here, while later this week we're going to have PPI and CPI. Those are going to be the key indicators ahead of the Fed September meeting. So the S&P 500, it's up about 0.2% here, while the NASDAQ just under about 0.5%. An interest rate cut this week or next week is fully priced in here, with strategists over at Goldman Sachs and Morgan Stanley expecting those interest rate cuts to further extend gains higher in the U.S. equity market. So you look at Goldman Sachs, they see the S&P 500 rising about 2% into the year end, and then about 6% here through mid-2026. You also have Mike Wilson. He's out at Morgan Stanley. He's saying that the next leg here in this new bull market is going to be driven by small caps. That's why we've been keeping an eye on the Russell 2000 here, because of the fact that we're seeing a lot of financial institutions start to diversify in some of the small caps as their earnings have accelerated here over the last cycle. The Russell 2000 up about 11% since those August lows. So the big question is here for the market is now how big of an interest rate cut is coming here. So you saw Standard Chartered, they came out and they put out a report indicating that they now expect about 50 basis points of cuts. So you look at the CME's Fed Watch tool, be sure you bookmark that. That next meeting is going to be at September 16th, 17th, where on the 17th is when they make that interest rate decision here. So the Federal Reserve, they are in this external blackout period here from September 6th all the way out to the 18th, meaning that you're not going to hear anything about any of the Fed speakers here coming out, giving anything as far as showing what their playbook is, because there's a lot of questions up in the air here. How will this inflation data we see this week, how will that impact the expectations here, and what is the result of the Fed's meeting? So you got a 90.1% chance of a 25 basis point interest rate cut, and you got a 9.9% chance of a 50 basis point interest rate cut. About a 10% chance of that 50 basis point cut. That's been about the highest that we've seen here since pre-Jackson Hole. So if we want to keep an eye on that area of the data here and look at the CME's Fed Watch tool on a consistent basis leading up into that. Now, I believe that we'll probably see an uptick here on the inflation data, and you're going to see a small setback on that number, and it'll get closer to 25 basis points being the one that is going to be the end result here once we do have that Fed meeting. So you look at some of the sectors in focus with the green on the screen. You do have Mag 7 stocks. They are edging higher in the pre-market trading, and you'll go to European trading. Well, those stocks gain as investors await a confidence vote out of the French Parliament. You go over to Asia. Asian equities, they did rise with Japanese stocks leading the gains as investors look to new leadership after Prime Minister Ishiba announced his intention to step down. So the MSCI was up just under about 1%. So if you look at the economic data coming out here, no economic data released here on Monday. And you go to crude oil, that's one of the big standouts as well, gaining about 2% here, just back over that 63 mark here, as oil clawed back some of last week's losses after OPEC Plus agrees to raise production, but at a slower rate than what was anticipated because of the fact they've got doubts on many of their members being able to keep up this external output. Now, if you look at the precious metals, the ETF flows on Friday, we saw buys in gold, palladium, and sells in silver and platinum. So gold up about 13%. The exchange traded funds, they added about 125,000 troy ounces of gold in that previous trading session. And then you look at silver up about 12%. They did take a bit off the board here. So $42 kind of been that pivot mark where, from my experience back in like 2011, and I've got tons of journals here that I keep like year after year, and I just label them month after month. As far as some of that playbook that I saw in there was, I made a lot of notes about that $42 being a resistance point. Then when we finally got a close above 42, we got an extension higher the following day. What we saw is a trading range between 42 and 44. So that's 42 as being a psychological resistance point, a previous resistance point. And then once we broke above it, we closed. Again, it was that 42 to 44 range, which was the consolidation. Then the breakout was fairly quick. When we went out and up to $50, we gapped higher and then reversed on a Sunday night. And then Monday morning, it was down pretty dramatic. And it took only 6 trading sessions for silver to go from 50 down to 33. That's why when we get near those lofty levels there, we're going to want to keep an eye on volatility. We're going to want to keep an eye on average true range. We might want to look at some put protection there and even be skewed slightly to the downside if that market's going to break back here, because of the fact that markets, they tend to take the escalator up and the elevator down. Now, looking at the changes last week, we saw ETFs, they increased their gold holdings by about 560,000 ounces. They reduced their silver holdings by about 2.87. They reduced platinum, and then they also increased their palladium. So we had a nice breakout on platinum and also palladium here last week here, and we got a little bit of a follow through today. You look at the gold silver ratio sitting at about 87 to 1. It's really broken down, and then it's been consolidating between like 85 and 88 to 1. So it's something to keep an eye on. You do have Bitcoin starting to push back higher here, looking a little bit more supportive on the charts, and the dollar index here, well, that's consolidating, but it's also starting to slide off a bit as we anticipate that additional weakness comes into the dollar index to the downside here, especially with the deterioration in the labor market. You do have the Fed starting its interest rate cut cycle here with the dollar near its lows, and many of the other foreign countries out there, you go over to Europe and things like that, that their inflation is starting to accelerate higher, so they're going to be unable to cut further, and what they're actually going to do is start to pivot hawkish here, and that's where you get the dollar index getting that tailwind as far as a sell-off to the downside, in my opinion. So you guys got any questions, give me a call, shoot an email to info@bluelinefutures.com, and remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.